Thanks for continuing on with us. I take over from my colleagues Najib Aroff as well as Rozman. This is my first day back in the studio after a week travelling to the UK. And there's plenty of news coming in from the UK. Let's start with our first news regarding the UK Treasury. The United Kingdom's Treasury Chief Jeremy Hunt on Monday told lawmakers that he was cancelling Truss's plan to reduce the basic rate of income tax by 1 percentage point and most of her other libertarian economic policies. In a message aimed squarely at reassuring the financial markets, he said that Britain was a country that funds our promises and pays our debts. Such major policy announcements are normally made first in the House of Commons, but Hunt disclosed most of the details hours in advance in a televised statement. Hunt was appointed Friday after Truss fired his predecessor, Kwasi Kwarteng, who spent less than 6 weeks in the Treasury job. Hunt is seeking to restore the Conservative government's credibility for sound fiscal policy after Truss and Kwarteng rushed out a tax plan cuts without detailing how they would pay for them.
We are a country that funds our promises and pays our debts. And when that is questioned, as it has been, this government will take the difficult decisions necessary to ensure there is trust and confidence in our national finances. That means decisions of eye-watering difficulty. But I give the House and the public this assurance: every single one of those decisions, whether reductions in spending or increases in tax, will be shaped through core, compassionate, conservative values. What we are seeking is long-term sustainable increase in the economic growth rate, and that is a central policy of the Prime Minister, which has my wholehearted support. I am not against the principle of taxing profits that are genuine windfalls, but as he will know very well, in the energy industry, it is a very cyclical industry, and there are businesses that have periods of feast and famine, and you have to be very careful that you don't tax companies in a way that drives away investment. So we have said that nothing is off the table.
Still in the United Kingdom, British PM Liz Truss apologised yesterday, admitting her government made mistakes after the announcement of economic measures last month's mini-budget spooked the financial markets. Her comments came as the UK's new Treasury Chief ripped up the government's economic plan on Monday, drastically reversing most of the tax cuts and spending plans announced less than a month ago. The move raises more questions about how long the beleaguered British leader can actually stay in office. Responding to questions over her future, the defiant Prime Minister said that she wanted to focus on delivering the British public. While the reversal of policy calmed financial markets and helped restore the government's economic credibility, it further undermined the Prime Minister's rapidly crumbling authority and fueled calls for her to step down before her despairing Conservative Party forces her out.
What I'm focused on is delivering for the British public. Now, I recognise we have made mistakes. I'm sorry for those mistakes, but I've fixed the mistakes. I've appointed a new Chancellor. We have restored economic stability and fiscal discipline. And what I now want to do is go on and deliver for the public. We were elected on the 2019 manifesto. I'm determined to deliver on that. Levelling up, securing investment into all parts of our country, getting roads built, getting opportunities right across the nation. And that's what I'm thinking about, and that's what I'm focused on. My message is we should be focusing on delivering for the British public. We are in difficult economic times, we're in difficult international times with the war being perpetrated in Ukraine. And now is the time to focus on delivering, making sure that we are delivering on our energy package. So before we stepped in, people were facing energy bills of up to £6,000. We've now put in place the energy price guarantee. We've reversed the national insurance increase, and that's what I'm thinking about as Prime Minister.
Still talking about the United Kingdom, the markets that have stabilised following a financial statement by the new Treasury Chief, Jeremy Hunt. Chris Beauchamp, Chief Market Analyst at IG, said markets were glad to see the calm in Hunt's statement.
I think markets are just glad to see the calm echoed in the statement. I think with the previous Chancellor and the budget outlook there, it was a bit too dramatic for their liking. And we are in a very interesting world where borrowing costs and interest rates continue to go up. There's a lot of uncertainty about how deep the recession will be and how governments can help. I think they don't want to see the government spending or making too many big claims on spending at the moment when there's still perhaps a lot more to come in terms of economic pain. Uncertainty about the new Prime Minister. I think there's also more uncertainty about if they try to replace it, because what would that involve? Would it be a short, sharp change with a sort of rapid coronation? Would we have to go through the whole leadership contest again, which brings in a lot more uncertainty? So I think markets in some ways would rather things just stayed as they are for a while. Okay, the PM has found her authority quite truncated, but at least you've got the Chancellor in place, almost running the country in place of the PM for the time being, at least on the fiscal side of things. And I think they're quite content with that slightly odd state of affairs for the moment.
Let's talk a little bit more about oil, as the prices held steady on Monday in choppy trading, as fears that high inflation and energy costs could drag the global economy into recession offset China's continuation of loose monetary policy. Senior Vice President of Trading at Boat Financial, Dennis Kissler, said that US inflation remains a front topic, with the Fed set to raise rates at least into next year. There are fears that demand destruction will escalate further, and China's central bank rolled over maturing MTN or medium-term policy loans on Monday while keeping its key interest rate unchanged for a second month, a signal that loose monetary policy could be maintained. Beijing will also greatly increase domestic energy supply capacity and step up risk controls in key commodities including coal, oil, gas and electricity, a senior National Energy Administration official said yesterday. Brent crude futures were down 1 cent or 0.01% to $91.62 a barrel, recovering from a 6.4% fall last week. US WTI crude was down 15 cents or 0.2% at $85 a barrel. Meanwhile, stocks closed sharply higher on Wall Street, marking the latest about face for a market that has been unsteadily lurching between gains and losses in recent weeks. The S&P 500 jumped 2.6% on Monday, more than recovering the ground it lost in a sell-off on Friday. The Dow added 1.9% and the Nasdaq climbed 3.4%. BOA or Bank of America rallied after reporting earnings that beat forecasts. UK government bonds rallied following news that the country's new Treasury chief was abandoning nearly all of a series of unfunded tax cuts that had upset markets. Scotland's First Minister on Monday laid out plans for how Scotland could become independent from the rest of the United Kingdom while criticising British Prime Minister Liz Truss's current economic measures. Speaking in Edinburgh, Nicola Sturgeon suggested Truss and her administration were without a shred of credibility and called the economic situation gripping the United Kingdom a self-inflicted crisis. Sturgeon did relay her hopes that the current changes announced by the newly instated UK Chancellor Jeremy Hunt would deliver some stability in the markets. Sturgeon went on to announce a third prospectus paper outlining a potential solution for situation in Scotland to become independent from the UK and suggested the current economic downturn and the historical trends shown suggested that the UK economic model is failing and failing badly.
I also reflect as First Minister that if I had given in to
Meanwhile, China's central bank rolled out maturing medium-term policy loans on Monday while keeping its key interest rate unchanged for a second month. This is, of course, greatly increasing some ideas on stepping up risk controls and key commodities, including coal, gas and electricity. Brent crude also shown some interest in terms of gaining ground. And of course, we can move now to the local bourse. The local bourse is still trying to recover from falling below the 14,000 points. Currently, it is at 1,391 points, up 5 points or 0.36%. There's also conversation into how trading is actually quite slow this morning. At about 639 million shares being traded, valued at about 300 million ringgit. 336 counters are in the green, while 180 counters are in the red. Some key movements this morning include Petronas Dagangan. It is up 44 cent to 20 ringgit 44 cent. MPI is up 40 cent to 25 ringgit 80 cent. And KLK Plantation is up 18 cent to 20 ringgit 38 cent. What is on the table right now is because KLCI fell 1.7% week on week last week due to uncertainties ahead of the elections and weaker global sentiment. Foreign investors stayed largely biggest being the contributor and largest weekly net sellers for the 6th consecutive week. Net selling include Public Bank and Petronas Chemical. Local institutional investors were the largest net buyers for the 4th week running. And of course, net buying includes Petchem and Public Bank. Retail investors turned net buyers of 117 million ringgit worth of equities from net sells. Net buying include Maybank and Gen M. Health tech, technology and financial services were the top short sectors last week. And CGS-CIMB, the research house, says that they expect investors to stay cautious ahead of GE15 to be expected done in November, and the US Fed rate decision that is going to come up on the 1st or 2nd of November. Let's take a look into some companies. Astro Malaysia has lost over 860 million ringgit worth of market cap since its second quarter of the financial 23 earnings release, sending its stock down 21% in just 3 weeks. While piracy has eaten into Astro's earnings, the group's financial position remains robust, with FCF over twice its net profit. CGS-CIMB projects the 2023 forecast dividend yields to come at 9%, higher than most stocks under their universe of coverage. CGS-CIMB has upgraded Astro to add from hold. Meanwhile, in ESG news, Malaysia reiterated its efforts to tackle climate change risks in its Economic Outlook 2023 report, and Bursa Malaysia announced enhanced sustainability reporting requirements for listed companies on 26 September for main market and ACE market as well. This will be implemented in a phased manner starting on or after 31st December next year, 2023. We are positive, CGS-CIMB argues, that this is in the medium term, as it will boost sustainability practices and disclosures of listed companies in Malaysia. And after their inaugural ESG Day, CGS-CIMB is optimistic to report that more companies have pledged to reach net zero emissions by 2050 and set up pathways to achieve that particular milestone. Now, I've had a conversation with HSBC Amanah CEO in a media roundtable, and he was arguing that there are some ideas of how the company itself or the bank itself is trying to fund for green companies. We're looking at green companies that might be able to allow for better conversation into how companies or corporates can actually get more money from banks on this. So do check out my conversation with HSBC Amanah as well. Finally, some quick rundown into the key ideas that will take place this week. Malaysia and China are keen to complete the Singapore Kunming Railway project. More news on that very shortly in the weeks to come. MyEG is planning to establish a Sukuk Wakalah program of up to 1 billion ringgit, another item of supporting the fixed income markets moving forward. Companies include UMW Group, third quarter 2022 automotive sales at 93,972 units, highest quarter year to date for UMW Group. Finally, ECRL's Kuantan Tunnel achieves tunneling breakthrough ahead of schedule. Meanwhile, MyCC grants PPB time to submit written representation over price fixing claims. Final news, Golden land to purchase a 19.8 acre of land in Pahang for 10 million ringgit. So plenty of trading ideas for you on markets this week. I am happy to be back in the studio, so you're going to expect to see me more in the weeks to come or days to come. But for now, have a great week ahead. My name is Ibrahim Sani. Catch you in the next one.